In today's episode, I'll talk about two interesting stories. In the first story of the day, I'll talk about why Starlink, which is a satellite based internet service founded by Elon Musk, is so prominently in the news right now. And in the second story of the day, I'll talk about how India's IT industry might be struggling because of the United States of America. Welcome to the Daily Brief Show by Zerodha, where our aim is to cut through the noise and simplify the biggest news and stories in the financial markets in a way that is easy for all of us to understand, yet one level deeper as compared to your traditional news channels. I am your host Anurag Bansal, and today is Thursday, the 13th of March. Let's begin with the first story of the day, where I'll talk about how and why Starlink, which is a satellite based internet service founded by Elon Musk, is so prominently in the news right now. See, the basic news here is that just within a few hours, Starlink announced that it would work with both Airtel and Jio, which are India's two largest telecom companies. Now, this is pretty significant because it hints that Starlink might soon get not just one, but two possible routes into the Indian market. But that said, the announcements don't really have a lot of specifics, so there is a plenty of things that we still do not know and understand. But still, we try to dig into exactly why this is creating buzz, and we found out a few things that we thought you might also find interesting. So in order to understand all of this, let's first start with what Starlink exactly does. See, most of us get onto the internet through mobile data or our broadband. And the reason this is possible is because someone has invested money to install cell towers or to lay down fiber cables in populated areas, so it makes business sense where many people live. Now imagine you're in a very remote place, maybe somewhere like a small village with absolutely no reliable power supply or any telecom infrastructure. Normally, you would have no way to get online because companies will not set up networks for just a very few set of people. And that is where satellite internet comes in. See, Starlink uses a large network of small satellites that are floating in low Earth orbit somewhere between 350 and 1200 kilometers above us to send internet signals directly down to a dish that you keep on the ground. If you have a clear view of the sky, you can get a service that is reasonably fast and with little delay because signals don't really have to travel nearly as far as they would with older satellite systems which orbit at 36,000 kilometers above the Earth. Now, a few years ago, satellite internet had a reputation for being painfully slow, extremely expensive, and so full of delays that by the time you clicked on a link and the page started to load, you could go get a snack before anything even happened. And that is because earlier satellite providers used geostationary orbits way up in space. But Starlink's move to a much lower orbit has effectively shortened the distance signals travel, which has improved speeds and also reduced delays to a point where the service is pretty usable. Now let me tell you, it will still not always beat fiber broadband in cities, but it can be a bit of a game changer for people in regions with no connectivity whatsoever. Now back to the story of the moment, while these new Airtel and Jio partnerships might excite you at once, there is a catch here. See, both of these companies have made it very clear that this entire arrangement depends on SpaceX, which is Starlink's parent company, getting the official green light to operate in India. And this is of course not guaranteed, especially because a couple of years ago, Starlink had tried taking pre-orders here before getting the necessary approvals, and the government told them to shut down those sign-ups. Starlink as a result had to issue refunds, and its India head also had to resign. Now fast forward to today, there is still a long list of regulatory hurdles, including securing spectrum, which is by the way the frequencies that are required to send and receive signals, and licenses to run satellite operations. Now these can take a long time to come through, and if the government decides against it, the whole plan could fall apart all of a sudden. But even if Starlink does manage to enter India, there is one more major question. Who can actually afford it? See, Indian telecom services are among the cheapest in the world right now. Many people use low-cost mobile data plans, and by contrast, in markets where Starlink already operates, users pay much more amount of money. In the US, for instance, monthly fees can be hundreds of dollars, and in Indonesia, which is known to be one of Starlink's cheaper markets, Starlink packages can still start at around 4,000 rupees a month. Now that price is massively higher than what people typically pay here in India. Now reports also suggest that Starlink's yearly average revenue per user hovers around 1.5 lakh rupees in some countries, whereas a Jio user in India might just pay around 2,400 rupees per year. So if Starlink truly wants to serve rural India, which are the places that really lack connectivity, they really have to figure out new prices or special deals, because it is right now at least very hard to imagine people in many of these areas being able to pay thousands of rupees per month just to access internet. One more small and interesting twist here is that Airtel already has a satellite internet deal in place. In 2022, they signed an agreement with OneWeb, which is a company that also used a constellation of low Earth orbit satellites to bring broadband to remote areas of the country. Very similarly, Jio has also been working with a different satellite provider called SES. So then the obvious next question is, why are Airtel and Jio both signing up with Starlink if they already have their existing partnerships? See, maybe they're just hedging their bets because they don't really know which provider will actually succeed or get its approvals in time. Also, maybe they aren't really fully satisfied with the progress that these older partnerships are making right now. Honestly speaking, none of us know this because the language in the announcement suggests that even these companies are not fully certain about how they will integrate Starlink into their current offerings. Also, Jio's about turn here is especially interesting because once upon a time it strongly opposed Starlink's entry, mostly over how satellite spectrum should be distributed in the country. Jio wanted it to be auctioned the same way telecom spectrum is, forcing potential operators to bid huge sums of money. Starlink and other global satellite companies argued for administrative allocation, which is a more direct system and is a standard practice in many countries. Now, the Indian government at that time sided with SpaceX and they decided not to auction the spectrum, and that was a major blow for Jio after all the money it had spent acquiring telecom spectrum. But yet, now Jio seems to have changed its entire stance and is embracing Starlink instead. Now, it's not entirely clear what made them pivot here, but there is speculation about whether political or diplomatic factors might be at play. India was once seen to be dragging its feet about letting Starlink or Tesla in, but now Tesla is gearing up to open showrooms in India and Starlink has these early alliances with local telecom giants. Some people are also joking that it might be because Donald Trump is back in the spotlight in the United States and that India does not want to annoy him or by extension Elon Musk. Now, of course, nobody really knows what the true answer is, and it's quite possible it has absolutely nothing to do with any of this. All we can say for sure at this point in time is that the environment seems more favorable to Musk-related businesses now than it was a couple of years ago. Now, what all of this means for India's internet landscape is still very unclear. On paper, Starlink does sound perfect for connecting far-flung places that have no other form of internet. But in practice, the cost for the average rural consumer could be too high unless there is a massive change in pricing. Now, there also might be an opportunity for Starlink to sell directly to businesses, government programs, or specialized users who can afford it. But again, nobody knows if that is the approach that they are planning to take. At the moment, these deals with Airtel and Jio do not really include any detail on pricing, rollout timelines, or the specific way the services will be packaged and sold. So for now, people like you and I are mostly left with only questions. Will SpaceX get its approvals, and if so, how long will that take? Can Starlink lower its prices enough to reach Indians in places that need better connectivity genuinely? Will these telecom giants maintain multiple satellite tie-ups and let consumers pick which one they want, or is there some behind the scenes plan to go all in on Starlink at a later date? And of course, how did Jio go from trying to keep Starlink out to actually now partnering with it? Now, these are of course things that people are asking because the official announcements have been fairly vague. The only certainty that we have right now is that Starlink, which was once upon a time struggling to secure a foothold in India, suddenly appears to have not just one, but two massive doors opening for it. Now, whether or not Starlink actually walks through these doors, and if they do, how quickly they do remains a story that is still being written. With that, let's move on to the second story of the day and talk about how the Indian IT sector may currently be facing a slowdown because of US economic uncertainty, high interest rates, and shifting tech cycles. See, it's usually clear to everybody that stocks can rise and fall like a roller coaster. If you look at a typical stock chart, you will see consistent ups and downs that sometimes make it feel like the line is heading straight for trouble. Now, that is considered very normal for the stock market, but currencies on the other hand usually move a little more slowly. And when a currency like the US dollar suddenly starts behaving like a stock, it is usually a sign that something unusual is going on. And for a while now, specifically since early January, the US dollar index has dropped by about the same amount as the S&P 500, which does not really happen often because the US dollar is the world's reserve currency and it usually stays more steady than a stock index. And this shift in the dollar's value matters a lot to many different areas, from global politics and trade to the money that people send back home as remittances. Now, one place where it might leave a big mark is on India's IT sector. Now, India sells a wide range of products and services to abroad countries, but it is our software exports that earn us the most amount of money, beating even the export of petroleum products and precious stones. And within that software export pile, more than half of the business comes from the US. Now, whenever the US dollar or the US economy faces turbulence, our IT sector feels it almost immediately. And that is why, in addition to the strange movement in the dollar, plenty of broker reports have also been saying bleak things about the Indian IT stocks. It is a coincidence that both events seem to be lining up at the same time, but it is enough to make us all wonder if something bigger is exactly happening here. So, in order to know the details here, let's first understand a little more about the IT sector's journey during the pandemic. See, when everything went online practically overnight, the demand for digital tools and services shot up quite heavily. People worked remotely, companies moved to cloud, and consumers got used to shopping and living online. It almost felt like a golden era for IT because so many projects that might have taken years to unfold otherwise happened in a rush between 2020 and 2022. But the reality is that this kind of breakneck growth cannot really go on forever. And of course, eventually the speed slowed down, and after a while, normal market forces started to reassert themselves. Since early 2025, markets in general have been choppy, but the IT sector in particular has taken a bigger hit than any other parts of the market. The Nifty index has lost around 17% of its value this year, but the broader Nifty 100 is actually down 7%. And this points to some deeper issues affecting technology companies. See, most analysts who track this decline in IT stocks say that there is not a single cause that you can easily blame here. And that is because markets rarely move for one neat reason. But still, if you look at the research notes from brokerage houses, you will find that many are worried that growth might remain poor in the near future. Some reports even suggest that the year after next will not be any better than the coming year. ICRA, for instance, expects IT revenues in dollar terms to go up by only 4 to 6% in the financial year of 2026, following a forecast of 4 to 5% for the year before that. And that, of course, does not sound like a big improvement on the horizon. One reason they're pointing to here is tied to the US itself. See, right now, the Trump administration is trying to handle what they see as a serious economic challenge, including a large fiscal deficit. Their approach involves using tariffs, tightening immigration policies, and pushing through something called DOGE reforms. Now, if those do not work out exactly as planned, it could slow down growth in the US, push inflation higher, and also keep interest rates high for much longer. And when the US economy slows down, like you would imagine, American companies tend to cut back on their IT spending, and that, ladies and gentlemen, directly hurts Indian IT businesses. The Atlanta Fed is even predicting that US GDP could shrink by 2.8% in the first quarter of FY 2025. Now, of course, we will not know for sure if that number is accurate until official data comes out, but the mere possibility is enough to make companies worry. What nobody can say is whether the administration will keep up these policies if the stock market keeps losing ground, if unemployment goes up, or if a recession sets in, especially with the midterm elections due next year. And that uncertainty alone makes some CEOs very cautious about spending money. High interest rates can also be a very big deal in this story. Investors had hoped for a situation where the US economy would slow just enough to bring inflation down, then bounce back without falling into a full-blown recession. And that could have allowed the US central bank to cut interest rates from around 5.25% to 5.5%. And that would make it cheaper for businesses to borrow money for expansion and in turn spend more on tech projects. But the thing is, with inflation refusing to settle down and new American policies adding fresh complications, interest rates might stay high instead. The yield on US Treasuries jumped from around 3.6% to nearly 4.8% in a very short span, and higher yields usually make borrowing more expensive, like you would imagine. And when that happens, companies in areas like banking, telecom, or housing, which are big tech spenders, tend to hold back on their spends. And of course, that spells trouble for Indian IT firms who are hoping to sign new deals or expand their existing deals. See, whenever the US economy changes speed or direction, the effect on Indian IT is multiplied when tech itself goes through a shift. In the decade after 2010, businesses were heavily focused on outsourcing and cloud adoption, and that helped our IT firms grow quickly. Then there was another boom after COVID-19 when digital transformation hit its peak. But now that cloud and digital are already well established in the market, the next major shift towards generative AI or next gen cloud services is still taking shape. And this transition phase can be a little bit shaky because companies usually take time to figure out how these new technologies fit into their own strategies. And that is another reason why Indian IT could see slower growth for some time now. And I know now all of this paints a very gloomy picture for all of you, but the good news is that there are still a few hopeful signs. One is Europe's response to the changing climate in the US. See, because of the tension in trade relations and the threat of tariffs, European countries have been making their own manufacturing plans, increasing defense budgets, and trying to grow their economies from within. Now, they account for about a fifth of India's IT exports, which is less than half of the share that comes from the US. So, they cannot really replace the entire US market. But if Europe strengthens its own industries, it might really create some extra demand for Indian IT services. Now, of course, this fully will not solve the problem, but it could definitely soften the blow that we might face. One more potential cushion here is closer to home itself. The Indian government has rolled out a large income tax break in the most recent budget, and the Reserve Bank of India has been pumping liquidity into the system. Now, this could really help domestic sectors like retail, housing, and automobiles, which then might turn around and spend more on IT. So, if global conditions remain unsteady, at least a stronger local economy could help keep Indian IT from hitting rock bottom. By the way, all of that said and done, most people agree that India's IT sector is currently going through some serious slowdown. Some industry veterans argue that it is a chance for us to rethink the traditional business model. Ramurthy, who's a former chairman and managing director of Cognizant India, wrote on LinkedIn about how Indian IT companies have always operated with an asset-light labor arbitrage style. They basically earn a lot of cash and distribute most of it back to its shareholders as dividends. Now, this used to work fine when labor costs were our biggest competitive advantage, but that edge has now been slowly shrinking. So he suggests that Indian IT companies could consider using some of their extra cash to actually invest in tech startups directly, which could help grow a new generation of companies instead of just selling services. One more idea is to build our own infrastructure in areas like cloud computing, AI, and cybersecurity so that Indian firms are not just waiting around for the next wave of global tech trends. So, in the end, if I were to summarize all of this, everyone sort of agrees that these ideas may sound far-fetched for the moment, but they also highlight the fact that Indian IT has the opportunity to rewrite its own playbook. A lot depends on how quickly companies adapt and whether or not they are willing to experiment with new ways of doing business. That brings us to the end of the two stories of the day. With that, let's move on to the final section, which is the quick news headlines. First, Reliance's JioStar is set to generate about 6,000 crore rupees in advertising revenue from the upcoming IPL, which marks a 58% increase from last year's 3,900 crore rupees. With 90% of ad inventory already sold, digital platforms will contribute about 55% of the total earnings, while linear TV will account for about 45%. Second, TVS Motor has informed the exchanges that its stake in the Indian Foundation for Quality Management or IFQM has reduced to 18.18% following the allotment of additional shares to other investors. Now with this, IFQM is no longer classified as an associate of TVS under the Compliance Act of 2013. Third and the final one, Singapore's Temasek has agreed to a deal to acquire 10% stake in Haldiram Snacks Food Private Limited for 8,500 crore rupees, valuing the company at about 85,000 crore rupees or close to 10 billion US dollars. That's all the news and stories I have for you today. This is your host Anurag Bansal signing off. I'll see you in the next episode. Take care and goodbye. Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.